Let's review journal entries. So before we can start preparing journal entries, we first need to understand normal balances. So we have this T account on the screen right now. Debits go over on the left, credits go over on the right. So there's three different types of accounts that will increase with a debit. Assets, drawings, and expense accounts all increase with debits. While liabilities, capital, and revenues, those three all increase with credits. So if we understand these normal balances, we can then start working on journal entries. So here's an example journal entry. You have the date of the entry, you have which accounts are being affected, and then you have the amounts that are being debited or credited. Let's first take a look at cash. So we see that cash is being debited in this entry. Well, cash is an asset, which means that it's increasing with this debit. Then we take a look at owner's capital. You'll notice that owner's capital is indented a bit in this entry. That's because this account is being credited. So owner's capital is one of those accounts that increases with a credit. So in this entry, both of our accounts are increasing. Cash is increasing and owner's capital is increasing. Now if we take a look at our amounts, we notice that our debits and our credits equal. This always has to be the case. Your total debits and your total credits must equal in every single journal entry. So this journal entry would be the entry for a transaction like the owner invested cash into the business. Right? The company's getting cash and owner's capital is increasing with that investment. So if we work on a few other examples here. On January 6th, you performed services worth $8,000 and billed customers. So you need to think about, okay, which accounts are being affected? Well, whenever we see performed services, we need to start thinking service revenue. So service revenue is going to be one of our accounts. And then the other key phrase here is billed customers. If we are billing our customers, we're sending them invoices, that means that they owe us money. And whenever someone owes us money, we call that accounts receivable. So accounts receivable is an asset. So we want to increase that asset, so we debit accounts receivable, and then we credit service revenue. And you'll notice the account being debited is always listed first. Now, how much do we want to debit accounts receivable for and credit service revenue for? That's where that $8,000 comes in. Because we billed our customers $8,000 and we performed services worth $8,000. Now on January 10th, we purchased $30,000 of equipment. We paid $6,000 in cash, and the remainder will be on account. So let's break this up into its individual pieces. We are purchasing equipment. That means that we are getting equipment. Equipment's an asset, so we want to debit our asset account equipment. Now the next piece is that we paid $6,000 in cash, so we put a down payment on this equipment. So if we are paying out cash, that means that we're losing cash. So to decrease an asset, we credit that account. So we want to credit cash to make its balance decrease. And then it says the remainder on account. Well, that means that we will have to pay this remainder down the road. So we credit our accounts payable because we owe people money. Accounts payable is a liability, so it's increasing with this credit. Now for the numbers. Equipment. How much are we going to debit equipment for? Well, that's the $30,000. That's how much this equipment was worth. The cash, that's the $6,000 in cash that we paid when we made this purchase. And then it told us the remainder on account. Well, we still owe $24,000. So we want to credit our accounts payable for that $24,000. And you'll notice your total debits still equal your total credits. Now on January 27th, we received a utility bill of $300 due next month. So we got a bill in the mail for our utilities. We aren't paying it yet, but we owe this money. So we're going to debit an expense because this utility bill, this is our utility expense. And we aren't going to pay the bill right now. So since we owe them money, we want to credit accounts payable. For how much? That's where that $3,000 comes into play. So as long as you know your normal balances, you can start talking yourself through how to prepare all of these journal entries.